Hello, so we have had a lot of requests for an additional video with specific examples to add on to our bigger explanatory video about basis period reform. So if you're starting here on this video, I would suggest you go back and have a look at our main video explaining the principles of basis period reform, what it's all about, how it affects musicians, sole traders in the 23-24 self-assessment tax return. Go and look at that. It's about 15 minutes to understand the principles, and then follow that with this one, which gives you a specific working example that you can then use and tailor to your own situation in order to help you complete the self-assessment tax return. Just to be aware, we also have a self-assessment tax return completion guide. It's a little 5-section course that you can follow along with, and it guides you through the process of filling out your self-assessment return. It's really designed for those of you who are musicians, sole traders, operating below the VAT threshold, and for the most part running a fairly straightforward business, so with reasonably straightforward income and expenditure and minimal, if any, capital allowances. So you can also check out that guide if you need to, but this is very much focused on the little subsection of your self-employment pages in the self-assessment tax return 23-24 for those of you who are affected by basis period reform. In other words, your accounting year end date does not line up with the 23-24 tax year. So with all of that explanatory detail in mind, I'm jumping straight into my self-employment pages of the self-assessment tax return. So I'm calling myself Abacus Trading. It's not a very musical name, but there we go. I'm going to assume I have turnover below 85,000. We're going to skip through the business starting or ceasing in the 23-24 tax year, and we're going to go to the accounting details. Now you'll see in my example, my accounting, my books start on the 1st of July 22, and that is because my previous normal 12-month year of accounts that I put into last tax return, the 22-23 tax return, ran from the 1st of July, in my example, the 1st of July 21 to the 30th of June 22. So I now need to pick up from the next day, which is the 1st of July 22. And in the normal course of events, I would just be doing 12 months, taking myself up to the 30th of June 23. That would be going into my 23-24 tax year and into my tax return, and that's it, job done. But of course, because you're required to bring your accounts into line with the tax year, I would recommend extend our accounting period, produce a long period of accounts that runs all the way up to the last day of the tax year. That is the 5th of April 2024, and we're going to record and declare that full extended period of accounts, which is 21 months plus 5 days in this 23-24 tax return. Now obviously the dates I'm using are my example dates. Your accounts might run from the 1st of September to the 31st of August. They might run from the 1st of January to the 31st of December. You need to apply the basic principles to your specific dates. The other thing I would add is that HMRC will happily accept any dates between the 31st of March 24 and up to the 5th of April 24. And from now on, next year, I'll report from the next day, which will be the 6th of April 2024, to the following 5th of April 25. So now my year of accounts will line up with my tax year each year, and that's what I will declare in self-assessment returns going forward from the 24-25 self-assessment return onwards. So I'm saying no to special arrangements, no to the idea of declaring it on a previous tax return, no to the balance sheet, because for most of you as sole trader musicians, you just don't need a balance sheet. You're much more interested in the cash situation in your business. I'm saying yes to the cash basis. It's another topic entirely. We have a video on that too, so do go and check it out if you're wondering what I'm talking about there. But we're making the assumption that you're declaring your income and expenditure on a cash basis. Yes, it will give you this scary warning. There are certain expenses that are a bit restricted on cash basis, although that's becoming more flexible in the future. Okay, so I've pressed save and continue, and I'm moving into the actual numbers bit. So my turnover in our example is 80,000. Obviously, your example will be different. I'm going to record my expenses as a single total value down here at the bottom as other business expenses. And that is something I can do because I'm below the 85,000 turnover threshold. If you're reporting details somewhere else, or you're getting the analysis you need somewhere else, then recording as a single value here is absolutely fine. There's nothing disallowable because I've worked all of that out somewhere else. I don't need to worry about that. I'm going to exclude capital allowances for the purposes of this video. Again, we have more detail on that somewhere else, but I'm going to assume you're keeping it simple. We don't have any tax adjustments. So our basis period began on the day after our last period ended, so that's the 1st of July 22 in my example, and it ends on the 5th of April 24. Now we are going to need to put a number in this transitional profit or loss box, and I'm going to move across to the spreadsheet that shows you how to calculate what that number needs to be for you. Okay, so here I am on my same working example. There's my income of 80 for this long period, my expenses of 30, my taxable profit of 50. I'll say it again, your numbers will be different. And this is where we're going to work things out. So the 1st of July 22 to the 30th of June 23, being our normal 12-month period of accounts, is 365 days. Yours will be exactly the same, I would assume. Then we have to work out the number of days from the next day, which is the 1st of July 23, up to the 5th of April 24. For us, that's 280 days. It's going to be 280 days for everybody who uses those days. We can't bend the days. But if you're using 31st of March here, then obviously you're down at 275 days. So you can put those numbers in here and it will work out the fraction of the total period of accounts, which is this 21 months plus 5 day period, this massive nearly 2-year period of account, and it'll work out the fraction of that that relates to your normal 12 months and the fraction that relates to this additional 12-month period. So you'll see this is where I've worked out that fraction. This 57% of the total is the 365 days divided by the total of 645. That's the two periods added together. And this 43% fraction is the 280 days, the transitional period, which ran from the 1st of July 23 to the 5th of April 24. And that gives us the second fraction that we need, which is the 43. And now we need to apply that fraction to our total profits to work out which bit of profit relates to the original 12 months and which bit of the total profit of 50,000 relates to the transitional period, which is this add-on period. So you'll see here, I've taken my 50,000 and I've multiplied it by my 0.57 fraction to give me profits of 28,294 in my main period, the one that is kind of business as usual and that I'm used to using. And then I've taken that same 50,000 for the total long period and multiplied it by my 0.43 fraction to give me the proportion of that total 50,000 that actually relates to the transitional period. Okay, so we need to remember these numbers, 21,705 and 28,294. I'm going to write them down. So now that I've done my little workings, I'm back in the tax return itself, and I need to take that transitional profit and move it out of the total profit figure of 50,000. So you'll see I've put that 21,705, I've put it in as a minus figure in this box here, because it's going to reduce that total profit for the 21-month period. It's going to take that overall profit of 50,000 and take out £21,705 worth of it. Okay, I'm not going to use this box just yet, the overlap relief box. Okay, so having allocated the chunk of profit that relates to my main 12-month period, I now need to add in the chunk of profit that's going to relate to the additional period that runs up to the end of the tax year. So I'm now adding back in that same 21,705 because I'm allocating it to my transitional period of profit and loss. And I'm going to deduct my overlap relief brought forward against this. Now, your overlap relief is the amount of overlap profit that was created back when you first created your period of accounts and they didn't line up with the tax year. It'll be a historic number that you're carrying forward year on year. You've probably been carrying it along for ages. If you've forgotten about it, you've no idea what it was, you've moved on from an original accountant who did the calculations for you, what you need to do is fill in a form, send it into HMRC. They're asking to have it by the 31st of December, so get it in as soon as you can, and they will tell you what the overlap profit figure they have on record for you is. And that overlap profit that they have on record for you is the number that you put in here. Or indeed, if you have that number because you've been keeping a note of it, that's the number here. But it's the amount of profit that was essentially taxed twice donkey's years ago when your accounting period was first created. For our example, again, it's just our example, I'm using 12,500 as my overlap profit being carried forward, and now we're going to use it in this tax return. We've got these two numbers, but now we need to go back to our working sheet to figure out what number we need to put in this box here, which is the spread of the additional profits that are being brought into this tax return. Because you have the option to spread them over this tax return and the subsequent 4. So you can spread it over a maximum of 5 years. And that's really HMRC recognising that there's additional profit, somewhat unexpected, being brought into this tax return. You don't have to spread it. You can bring it all into this year if that's better for you. You will find that if you've made a loss in this transitional period, because maybe the overlap relief figure you're using here is actually higher than your transitional profit. If that's the case, there's no spreading required. You've got a loss in this little subsection. But for those of you for whom there is some additional profit being brought in, you can spread it out over 5 years. So let's have a look at what we're going to do there. So here I am back in my spreadsheet again, and there's our main profit period. There's our profit for the transitional period. There's our overlap profit being brought forward, and it's being deducted from that 21,705. It leaves a remaining figure of 9,205. That now becomes the additional profit that would be taxed in this tax return in the first instance, but we have the opportunity to divide that into 5 and spread it out over this year and the next 4. So I'm dividing that 9,205 by 5. It gives me this year's allocation of 1/5 of the transitional profit taxed as 1841. So like before, remember that number. We're going to put in this 1841 transitional spread of profits here, and now we're nearly done. We've done all the main thing, and I'm going to take you to the calculation so you can see how it all sits together. So there are a few key numbers you're looking for in your calculation to make sure that this has all worked properly. The first is your main period profit of 28,295. Let's go back and have a look at our spreadsheet and check that. Yeah, great. Look, there's our main period profit, 28,294. The next number we're going to be looking for on our calculation is the 1841, which is the additional bit being taxed this year. So in my calculation, I've got some other bits and bobs coming through on my tax return. I'm not going to worry about them. I'm really just looking to see what's going on with self-employment. So I'm skipping down through my calculation, and this is the other bit I really want to see. There is the 1841 being brought into my tax calculation and taxed, gives me a tax amount of 368.2. That's the tax I'm paying on that transitional bit. But you can see that's not too horrific if you think about your starting point. Your starting point was 21 months plus 5 days worth of taxable profit, and over the course of the adjustments here in the self-employment pages, we have figured that out so that it's business as usual for the 12 months that you're used to, and then we've done the adjustment for the additional 9-month plus 5-day period. We've then reduced it by the overlap profit we've been carrying forward, so that's reduced it by a certain amount, and then we've divided that reduced amount into 5 in order to get 20% of that additional profit being brought into this tax return. I would point out, however, that 1841 is going to rear its head in the next 4 tax returns as well. So you're going to be taxed on that same figure because you're spreading it out over 5 years for the next 4 tax returns in addition to this 23-24. Here ends the lesson on basis period calculations for your self-assessment 23-24 tax return. I hope it's helpful. You'll see by virtue of the video that it's a complicated bit of tax this year. If you possibly can, take some dedicated advice, but if not, I hope this video helps you a little bit.